Do you want to be rich? It's a simple question, but the answer usually leads people down a path that keeps them poor. You go to school, you get good grades, you get a safe job, and you work hard. But have you ever noticed that even people who follow this path perfectly often struggle with money their entire lives? They work harder and harder, but they never seem to get ahead. Robert Kiyosaki calls this the rat race, and in his book Rich Dad, Poor Dad, he explains exactly how to escape it. Robert grew up with two fathers. His poor dad was his biological father, a highly educated man with a Ph.D., who worked for the government. He was intelligent and hardworking, yet he struggled financially all his life, leaving behind bills when he died. His rich dad was his best friend Mike's father. This man never finished the 8th grade, but he became one of the richest men in Hawaii, leaving tens of millions of dollars to his family and charities. The difference wasn't their education. It was their mindset. For example, when the poor dad wanted something expensive, he would say, "I can't afford it." His brain stopped working. It was a statement of defeat. The rich dad forbade those words. Instead, he insisted on asking, "How can I afford it?" This forced his brain to think, to find solutions, and to create opportunities. One approach is mental laziness, the other is mental exercise. The lessons Robert learned from his rich dad over 30 years can be boiled down to a few core principles that completely change how you look at wealth. The first and most famous lesson is this: the rich don't work for money. Most people are controlled by two emotions, fear and greed. Fear of not having money makes them work harder at a job they might not like. Then, once they get a paycheck, greed or desire makes them think about all the things they can buy. A new car, a bigger TV, a nicer house. So they spend the money, and then the fear returns. They have to go back to work to pay the bills. That is the rat race. The rich don't play this game. They don't work for money, they have money work for them. How? That brings us to the second, and perhaps most important lesson, the difference between an asset and a liability. If you want to be rich, this is the only rule you really need to know. You must buy assets. The problem is, most people don't know the difference. Here is the simple definition. An asset puts money in your pocket. A liability takes money out of your pocket. It sounds simple, but think about your house. Your poor dad and probably your banker will tell you your house is an asset. But rich dad says, no, your house is a liability. It takes money out of your pocket every month: mortgage, taxes, insurance, repairs. Even if you pay it off, it still costs money to maintain. Now, this doesn't mean you shouldn't own a home. It just means you shouldn't count it as the thing that will make you rich. The rich focus on building their asset column. This means buying things that generate income, rental properties that pay you rent every month, stocks that pay dividends, businesses that run without you, royalties from intellectual property. The poor have expenses. The middle class buys liabilities they think are assets, like big houses and fancy cars. The rich buy real assets. This leads to the third lesson: mind your own business. This doesn't mean you have to start a company. It means you shouldn't just spend your life making someone else rich. When you work a job, you make your boss rich. When you pay taxes, you make the government rich. When you pay your mortgage, you make the bank rich. Rich Dad advises you to keep your day job if you need it, but start minding your own business by buying assets with every dollar you can spare. Every dollar that goes into your asset column becomes a little employee that works for you 24 hours a day. Another powerful concept is that the rich invent money. They don't just wait for a raise. They find opportunities that others miss. In the book, Robert tells a story of finding a bankruptcy property. The house was worth $65,000, but he bought it for $20,000 using borrowed money for the down payment. He made $40,000 in created value without using much of his own cash. He didn't work for that money. He used financial intelligence to create it. He understood that money is just an agreement. It's not real in the way we think it is. Finally, Rich Dad taught that you should work to learn. Don't work for money. If you're young, don't look for the job with the highest pay. Look for the job that will teach you the skills you need to become an investor or business owner. Learn about sales, marketing, and accounting. Those skills are worth far more than a slightly bigger paycheck. The path to wealth isn't about luck. It's about financial literacy. It is about controlling your emotions of fear and desire, knowing the difference between an asset and a liability, and building a column of assets that will pay for your lifestyle so you never have to work again unless you want to. So, start asking yourself today, are you buying assets or are you just buying liabilities? Are you working for money or is your money working for you? If you found these lessons helpful and want to build your own library of wisdom in just minutes a day, make sure to hit that subscribe button for 5-Minute Library. We'll see you in the next summary.